what happened is in 2007, I gave a talk and I predicted the collapse of the economy, catastrophic collapse. All right. And I published a 48-page paper, which I put on the web under survivethecrisis.com.
I read it.
Website's not there anymore. You read it. Okay. Well, in the first 2 months, Kerry, I got 10,000 hits from 125 countries.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Okay. And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. I am also the leader of Operation Algorithm Assassin. And the purpose of that is to defeat big tech on their platforms, make them stop censoring me and so many thousands of you out there. It's not about me, it's about the movement. Talking about movements, Darryl Schoon is with us now. Darryl, you've started a couple of movements in your life before, haven't you?
It was all timing. In fact, Kerry, that's what I sort of wanted to bring to the fore. You've been following me for a long time. And what happened is in 2007, I gave a talk and I predicted the collapse of the economy, catastrophic collapse. All right. And I published a 48-page paper, which I put on the web under survivethecrisis.com.
I read it.
Website's not there anymore. You read it. Okay. Well, in the first 2 months, Kerry, I got 10,000 hits from 125 countries. All right. I mean, people were reading what I was talking about: gold, the markets, the collapse. All right. Well, when I had done my study of the economy, I really looked at the Great Depression back in 1929, 1930s. And what people believe, and I think is true, that there were two major factors that set this thing in motion. The first thing was, of course, the Federal Reserve printing money, all right, just inflating the economy, all right? Britain had a central bank since 1795. They kept care of the golden goose for 152 years, became a world empire, and managed to survive. Well, when they saw their empire collapsing, their military costs were too high, they couldn't keep control of their colonies, their expenses were going up, the bankers knew they had to get out of Dodge and go somewhere else. So that's what they did. They transplanted a carbon copy of the Bank of England, very successful central bank, to the United States, the Federal Reserve, private bank. Okay. And that's where they found their home. Well, the difference, I had made the point before, was that there's a difference between the Brits and the Americans. The Brits are very buttoned up, tight, very, very like that. Americans, Kerry, we're crazy.
In your face.
We do things that other people don't do. Okay. And when we have a chance, we go for it where other people won't. Sometimes it works. Sometimes it doesn't.
We're a nation of risk takers.
Absolutely. And the Federal Reserve reflected that. 20 years, the Federal Reserve was in power, they got in 1913. 20 years later, they set in motion the Roaring Twenties. Cheap interest rates. They created a bubble that the British never had. All right, with the same car. It's like they gave us a Cadillac and we're doing wheat donuts on the freeway with it in 20 years.
And loop to loop.
Loop to loop, cheering, everybody's watching. We're at the races. In 1929, the bubble popped, it collapsed, and things happened. And then right after that, Hoover puts in the tariffs and takes the world down into a Great Depression after our crash. Okay. Now, here we are, 2025. History doesn't repeat itself, somebody said, but it does rhyme. Okay. And it's rhyming in my head. What I see now is in 2025, we've got the tariffs. Holy smokes, in 2024, we had no idea. I mean, a year ago, Kerry, nada. Now, they're front and center, okay? But we haven't had the collapse. Now, the collapse I predicted in 2008 started the year later. I mean, 2007. It started in September when Wall Street banks collapsed and we were headed towards the the crises and the total economic cataclysm that I predicted back in 2007. All right. But it didn't happen. Why? QT. That's something they had never done before. Never, ever done before. To me, it's sort of like your toilet not working. And so you've always had to go up and put water in it to make it flush. Well, what the central banks did was they simplified it. They took a water hose and stuck it right in the toilet and kept it on. Kept it on so this damn thing would flush. And they've had it on since 2009. Okay? Now, that's not how toilets are supposed to work. That's artificial. And the boys who are the plumbing boys, central banks, all right, no, it's really bad for the toilet to have that much water pressure coming in at all for a long period of time.
Overflow.
It's going to it's like steroids. Okay? You get steroids are a game changer and a life changer for a certain amount of time. After that, it's like heroin. Man, you're in trouble. You know, you feel good, and then you're in it. All hell breaks loose. So what happened is that after COVID, after the huge amount of money that they put in just to keep us floating, and they did, if they hadn't done what they had done, we would have gone into the drink then. But they floated. But what it did is the water pressure had to be increased. So now the Fed is trying to decrease the water pressure. Okay, they're trying to decrease it because they know the toll on the system. Well, the rest of the people, we don't care about plumbing. All we care about is taking a dump and having the damn thing work and not overflow on us while we're on the toilet. That's all we care about. We got lives to live. Okay, so there we are taking dumps, happy. Yo, man, it's all right. We're up and down, but things are all right. What is going to, I read something, Kerry, 1 month ago that stunned me because the collapse I predicted did not happen because of QE, but it's delayed. It's temporary delayed. It's like steroids. And I always knew it was going to happen. Gold has skyrocketed since when I wrote my book. Gold was at 6.25. What's it now? 34, 30. You know, it's way up. Okay. But the collapse still hasn't happened. All right. People look at me like Chicken Little. All right. They're relieved that when I show up, they're relieved I was wrong. Okay. I'm like Chicken Little. Hey, like my timing's off. All right. But it was because they instituted QT. I just read last month a paper from the Bank of America, of all places, the head of their investment analysis. And it stunned me because what he did, he put what I believe is going to trigger the collapse in a context that was so real. He caught me by the noogies. I usually don't get a lot of insight from them, from Wall Street. All right. But they do watch it far greater than I do. And this guy has his finger on it. Okay. It was called Trump Says Goodbye to Rehab and Embraces the Golden Triangle. According to Bank of America, Hartnett, global stock markets are all in until the bonds collapse. What he meant was the Golden Triangle is the heroin center of Southeast Asia. All right. Yeah. And he said, goodbye to rehab. And what he said was this. He said, right now, the markets who watch this know that it's all in, that we're going to go up. Why? Because Trump, the economic conditions are faltering. And what they're going to do is cut interest rates. They're going to be forced to. They have to. Okay. And that's all they're waiting for. Years ago, I made the observation, Kerry, that the difference between a free market and a capital market is that in a free market, the price of goods and services is determined by supply and demand. Very easy. Okay. In a capital market, in a fiat money, bank-driven market, the price of goods and services is determined not by supply and demand. It's a factor, but not much. The overriding factor is the cost of credit. Cost of credit. Okay. And you know that. Housing, everything. Okay. In business, you got a business, you're playing against time, you're on the clock, everything, because of compounding interest. Compounding, it drives the whole game. Okay. And it's and what the central banks do, they're like the juggler in charge of the debt and credit and debt, keeping them in balance. Okay. And but the credit and debt things have gotten bigger and bigger and bigger. I mean, so big they are having trouble juggling it. All right. Well, this Bank of America guy who observes the markets, the guy sitting on the toilet, issued a warning. And basically he said, keep taking dumps, but that toilet is going to blow up on you when this happens. All right.
Go outside behind the house.
Yeah, don't stay in the house when you start hearing the sounds. And this is what he predicted. Because they're going to cut interest rates, he said the markets know more liquidity is coming. Already, central banks are just cutting around the world because the general economy is in trouble. All right. So they're trying to raise it up with more steroids. Okay, cutting. Okay. Mm-hmm. He said what's going to happen is most of that money is going to go into assets because investors have access to the leverage that the general population does not. They're the first ones at the trough. They're closest to the spigots of credit. So what happens is when they lower the interest rates, the first money doesn't go into getting people richer, creating economic movement. It goes to the finance boys who take that money, go to Wall Street, leverage out stocks, bonds, real estate. And since they're all buying the same financial assets, that's where the bubble is. But they don't call it a bubble. They call it a rising market. Times are good, but it's a bubble. Okay. So what Hartnett says, we're in a crucial stage where everybody knows that it's risk on. And he said this in July. So he said, buy. All right. Crypto, cows, whatever. All right. It's going to go up until the bond markets react. He said, what going all in is going to do, it's going to put a huge strain on the bond markets. Now, what people don't understand is bond markets are 5 times larger than stock markets. Why? Because bond markets is where they trade the debt created by debt-based money. And debt-based money compounds and throws off more debt than the original credit issued. So that's why debt markets are 5 times larger than credit markets, okay? So the debt markets are far bigger and far more consequential. I've always said that the corral where it's going to happen, where the shootout's going to happen is not in the stock markets. It's going to be in the bond market. Absolutely. And that's what he says. He said, what happens? And he said, the equity people don't understand this. The equity people are buy. All they know is growth because that's how they're geared.
That's the illusion.
Yeah. The bond people are really conservative. They're like, so they buy the debt and they trade it off and they watch the basis points and they're satisfied with incremental gain over the possibility of great reward versus great loss. They don't like playing that game. They play a much more conservative, controlled game, but their game is affected by what's happening in the other arena. And what Bank of America analysts said is that when they're watching the arena, all right, but he pointed out he had asset growth in 2025. The asset class that is grown the most is not stocks, even though they're all at record highs. S&P, they're all at record highs. The asset class that has increased the most in 2025 is gold. All right. Now, gold is not increasing because it's future. It's not like AI. It has no value like that. Gold. People think gold is an inflation hedge. It is. Gold is really also a deflation hedge. When in the 1930s, when the stock markets collapsed, if you had 10% of your stock, if your assets in home stake mining, the world's largest gold mine, 10 years later, when everybody was down 90%, your portfolio would have been even. The 10% in home stake would have offset the loss of 90% of your portfolio. Okay, so it's a deflation hedge. It's an inflation hedge. What gold really is a chaos hedge, and we are in chaos times. Nobody knows what's going on. I mean, Trump doesn't know what he's going to do tomorrow. All right. He reads the news like you and I do, but unlike you and I. Yeah, exactly. Okay. But unlike you and I, what do? He has votes behind him. So everybody moves according to him. It's chaos. But this is where we are. And what blew my mind was how well the Bank of America paper enumerated this so clearly. Because I don't, to me, I have my predilections of who I listen to, and I don't listen to a whole lot, because my mind is pretty much set. But Bank of America is not one of them, okay? And I read this, and I went, holy smokes, Darryl. This guy has said what you weren't looking at in a way that you understand clearly, that it's risk on from here on out, until it's risk off. They're not going to know what's going to hit them because they're only going to be looking up when it happens. But it's the bond people who bonds are performing the worst this year. Gold is the best. Stocks are behind them. Bonds are the worst.
And crypto. Don't forget crypto.
Oh, crypto's, yeah. They're risk on asset classes. All right. He said buy crypto. But when it happens, it's going to, the risk on classes are going to go down. Gold is not a risk on class. Gold is a risk adverse class. Gold is the ultimate, and silver are the ultimate risk adverse classes.
So what I see happening now, and I see whomever the powers that be are fighting it, is a short squeeze in physical silver. That's happening, isn't it?
Oh, yes, it is. And see, what the deal is this. They're not even, Kerry, when this started, the attention of the boys, the cartels controlling the precious metal markets was incredibly powerful. They could control they would allow when precious metal markets finally started turning in 2002 after the collapse of the dot-com bubble. Finally, it started getting away from them. Okay, before then, for 20 years, they had driven it down after the 1980s. And then in 2002, the momentum was so big, it kept going up. So what they would do is they would allow a 5% increase. But why? Because they didn't want it to get to the awareness of the investor class at large that to play the risk buy gold.
So that was a pressure release valve.
It's the pressure release, yeah. So a 5%, they could tolerate that. All right. What they didn't want, their big fear was the gold versus fiat back then, because crypto didn't exist until 2009 when they started printing money. Okay, Bitcoin didn't even exist in 2008. It came into being on January 1st, 2009. All right. So what happened is that their concern was gold, because gold is really the threat to fiat. And it's not a threat because it does anything. It's a threat because when the currencies get threatened, everybody goes to gold. They always have.
Because it doesn't do anything. It
doesn't do anything. Exactly. It's there and has value. It's just valuable. So what happened is that all their concern was on gold and silver, and they controlled it. Now, the difference, Kerry, now is this. You're right. They are watching the squeeze. They are watching what's going on in gold and silver markets, okay? Because the truth is, when the breakout happens, silver traditionally has led gold in the breakout. Now, silver has not up till now. And gold, the breakout started in January, okay? They're up 20, they're way up, okay? And gold has led it, which surprised me, all right? Because silver has always, now, what I believe you may be onto something here is that silver is about to break out, and more people are connecting to silver than gold. Gold is the big boy game. Silver is the investor game, all right? Common money. And people are afraid of, the most common money is debt. What do they say? Gold is the currency of kings, silver is the currency of merchants, and debt is the currency of the rest. All right, and so that's where we are. So if silver takes off and breaks out, the people on the bottom will notice that more, and just the tide. That's where they're afraid. They're afraid that the people trapped in the arena, because there's only so many exits. Now, they weren't forced in there. They were in there by their own accord. They're in there because that's where the action is. All right. Now, the truth is circumstances has forced them in there, and it's forced them in there at the lowest tiers. The people who are in there by choice are the ones at the higher tiers sort of running things. All right. But they're going to go down because everybody goes down in one of these things. I mean, the flip is phenomenal. Those rich people with all their gold and silver are at the same time highly leveraged in highly vulnerable markets. They all are. Gold and silver is their life insurance policy, but they've got their real assets in the markets. All right. So when the markets go, they're in trouble. So everybody is in an arena. Okay. And what the Bank of America guy said was that arena, the noise is going to become deafening. It's already loud, record levels, but the decibels said stay in there, but get out the door. Yes.
Timetable. What's the timetable for all this?
He that's what it is. All he says is this: the United States will reach an epic debt shock. Okay. Hartnett believes that the long-term bear market for the dollar has just begun. Okay. And that's the critical piece. And he recommends increasing allocations to commodities, cryptos, international markets, and emerging markets in the latter half of the 2020s. Now, he doesn't know when the bond market is going to finally react. When the bond market is going to go, Japan is already having trouble selling its long-term debt.
Yeah.
Okay. Japan is the canary in our gold mine. They are. They had when the Nikkei collapsed in 1990, it went down 80%. That was the biggest drop since the Great Depression in the United States. The only reason it was smaller, the country's smaller. The effect there was damaging. And what they did, Kerry, was they started QE. They borrowed their way out. And all the bankers in America, yeah, you guys are doing the wrong thing. You guys are doing it. Yeah. You know what? We started doing it 10 years later. Because when you're there, it's the only thing you do. All that good advice, all your good advice doesn't matter. It's survival. So we are in the same thing. But your question is the real question. When is the bond people, when are they going to react? He said, he does give some parameters. When the interest rate on the U.S. Treasury goes to 5.1, on a long-term bond goes to 5.1. Watch out. It's going to happen after that. It won't happen before, but it'll happen after that. And he also gives in that article for the Bank of America, for the it was, I think, Japanese yen and the British pound. He gave, interest rates when it's going to exceed it. But I think the U.S. one was around 5.1. Go back. The article is entitled, you can Google it, Trump says goodbye to rehab and embraces the golden triangle. That means he's out of there. He's going to where they grow opium. Right?
Yeah.
That's what it is. According to the Bank of America Hartnett, global credit markets see all in until the bonds collapse. Google that. The article's there. It caught my attention. I believe that the people who watch this will probably have that same kind of reaction that I did.
Okay. All right. So we'll have to find that report. It's on Bank of America someplace?
Yeah. Well, I just Googled it generally, and that was the title. His name is Hartnett, Michael Hartnett, Hartnett, Chief Investment Strategist at Bank of America. The article was posted July 13th, 2025. So if you get an article around there, and the title is Trump says goodbye to rehab. Yes. Trump says goodbye to rehab and embraces the golden triangle. That's the article.
I love it. Well, hey, you always give us a lot to think about here, Darryl. I don't think he's really telling us anything that you and I in our community didn't figure out already.
Yes, but we didn't. To me, it was the fact that he had narrowed it down to dynamics that are right. Kerry, we've been at this so motherfucking long.
Yeah.
I mean, it's too long. All right. And that's why I don't write anymore. That's why I don't talk anymore, because I've said it, I just, I'm a horse. I'm old, but when I
feel the same way, man.
When I saw a guy from the Bank of America, from that side of the table, see what I have been seeing for years, I went, wow, with such clarity. I was amazed. And you know what? When the blind begin to see, horses will start flying.
Look out. All right. Hey, so Darryl, so you're not writing anymore, so
no.
But we'll put the link up to your site anyway, so people.
I do keep a news thing every day. I mean, I do post generally every day what I see going in articles of interest, and I realized the reason why I lost my website, so I lost most of the people who were always watching me. But I realized most people don't want to see bad news constantly. And that's what I seem to pose.
Right. So true. Yeah, who wants bad news? You're always seeing that stuff.
Yeah,
right?
that's enough. When we'd go to parties, starting years ago, Martha would say to me, Darryl, shut up. These people are here for a good time. Shut up. Let them have a good time.
I'm sorry, I can't help but laughing, but I know it's like nobody wants to hear this stuff, but everybody needs to hear it, right?
That's it. That's it.
Fine mess you've gotten us into here, Darryl.
Hey, all I did was open my eyes. I wrote a novel once, and I said, it's going bad, but I don't know why I'm the one that has to see it.
Yeah, well, I feel the same way, man. The same way.
Yep.
But I'll tell you what my former law partner always used to say to me. He used to say, Kerry, the situation is hopeless, but never serious.
Good. I take that in a very positive sense. It is hopeless. And, Kerry, I look at what's happening. You look so good. You do. And your books, and you're selling, you're on a roll. Kerry, I've known you a long time.
Yeah.
You're rolling. You're rolling. Keep rolling. You're rolling.
That's the key, man. That's the key. And, don't let the bastards get you down, right?
No, don't. I mean, my saying was, my tagline on when I started writing articles in 2007 was buy gold, buy silver, have faith.
Yes.
And that's really what it is. And I think at this time, faith is even more important than it was then, because the crisis that we're heading into is going to be a game changer. The game is about to change. And I think it's going to change for the better, because Buckminster Fuller wrote in 1982 that mankind was entering an unprecedented crisis that's going to transform humanity. And he said the reason why it's going to transform is that the institutions that have been in control, economic, political, and religious, are all going to lose their grip on humanity. And then humanity will find its own way by itself, which is going to end up better for everyone. But the transition is not going to be easy.
No,
they're not going down easy.
Be fun.
Yeah, they're not going down easy.
Will not be fun. That's for sure. Yeah. Well, Darryl, appreciate you coming on. Any questions for Darryl? Myself, KL@kerrylutz.com. And remember, you'll be getting some emails about Operation Algorithm Assassin. Keep your eyes open for them. Very important, because we're going up against the big platforms. You know who you are out there. You're probably monitoring everything we're saying now anyway. Doesn't matter. You can't stop what's going to happen, just like nobody can stop what's going to happen to the global monetary economic system. Darryl, we'll talk to you again soon. Be well.
Thanks. You too, Kerry.